welcome to our panel on technology funds. We're going to be talking, establishing a fund is really an exercise in trust and maintaining that trust. We're going to be talking about how to raise a fund in the European context using technology and doing that in a dynamic environment as much of Europe is going through today with COVID. My name is Eliot Hodges. I am the CEO of Anduin. We're a Silicon Valley technology company working together with fund managers to reimagine private market transactions. I am going to let each of our wonderful panelists introduce themselves in short order. But before I do that, I do want to announce that we have a poll question, namely, will in-person meetings ever make a return to the deal cycle? So please vote, and we'll reflect those answers back to the panel before our time is up here today. So to kick things off, Claire, let's have you give a brief introduction, and then followed by Ellinor, Bjorn, and then Alfonso.
Thanks so much, Eliot. And I certainly hope we can all go back to doing a little more in-person stuff, despite the business that Palico's in. So I am COO and head of strategy here at Palico. And Palico is the leading platform for institutional investors in private markets. And we have thousands of institutional members. And we really help institutional investors do their jobs better. Whether you're an LP looking to source investments or a GP looking to connect better with prospects, that's really what we do. And in a nutshell, we do something really different because we're flipping the engagement on its head, and it's no longer the GP chasing the LP, but the LP really driving the discussion and choosing to engage. We do that with streamlined tech tools in a super safe, compliant manner. So that's who I am in Palico in a nutshell.
Fantastic. Ellinor?
Thank you. And thank you for having me on this panel. Super excited to participate in this conversation. My name is Ellinor Schrewelius, and I'm at Verdane, and we partner with sustainable tech and tech-enabled businesses to accelerate their growth journey. And we invest in the northern half of Europe and have been doing so for the past 2 decades. And our last fund, which was 540 million euro, was raised completely online and closed earlier this year.
Wonderful. Bjorn?
Hello, Bjorn Tremmerie. I'm responsible for tech investments at the European Investment Fund. So EIF, for those not familiar with us, we are the largest funder and backer of European venture capital. We are a fund of funds, so we are not direct investors. We've got close to 20 billion under management. And on an annual basis, we invest between 1.5 to 2 billion in roughly some 50 to 100 VC funds in Europe. This year, because we're implementing some COVID relief packages as well, we're hoping to invest even more than the 2 billion. So that's for us.
Fantastic. Alfonso?
Hello, good morning to everyone. My name is Alfonso de León. I'm CEO, managing partner, and co-founder of Axon Partners Group. Axon is a Spanish firm. We do 2 businesses. One is advisory on the telco and technology space, and the other one is investing. We manage in the north of 500 million, 550 million. We have 2 different strategies, direct investment strategy, in where we invest in scale-ups, mainly, not only in Europe, but as well in India and Latin America. And then we have another leg that is a fund of fund, which invests in venture capital funds in the European region.
Thank you so much, Alfonso. Claire, would love to have you kick us off. I think one of the things that I've always been surprised by in this space is, on the one hand, you have technology funds that are investing in cutting edge science, literally investing in companies that are sending rockets into space on the one hand. And then on the other hand, they themselves are still powered by Excel and PDF, and would love your input on why that is. Why is there this discrepancy between corporate behavior and investment theses? And then beyond that, would love to sort of get a sense of what are sort of the areas where you're starting to see InvestTech start to play and be active.
Sure. And I think this goes to really the heart of the topic of the panel, which in some ways is just funny little words connected. I think it's raising a tech fund and using tech to raise a fund. And in some ways, they're really have nothing to do with each other. But I think there's some really interesting connection. And that is, as you said, there has been a ton of investment specifically in these fields. We call it invest tech, right? It's using technology to make better investments, make the process better. But there's but still the firms themselves that make these investments in some ways have been severely underserved or under adopting some of these technologies. And I think you're right. We talked about this concept the other day of eating your own cooking, or making sure that you're sort of consistent internally and externally. And I think this is a really interesting area where I think there's some room for improvement. And you asked specifically about why, and I think there's a couple of really interesting reasons. One is compliance, and we're in a heavily regulated industry, and it's really challenging, and it's challenging to take on additional risks, right? To try on new things, to be the innovator and the leader. This actually, Bjorn brought this up, which I think is at our prep session, which I think is super relevant too, which is, procurement processes can be kind of complicated. And then last, there's of course, everyone wants to be safe and secure. And actually, it's really funny because that's sort of my story. That before I joined Palico, I was working at an investment management firm and trying to do my job, frankly, with inadequate tools, with emails and PowerPoint and unanswered voicemail messages, and even we laughed about this, sort of browsers that weren't even up to speed. And I think you can kind of think about this as where we as investors have fallen behind. But I think kind of more to your point with the second piece is there is a ton of innovation right here in our own backyard for us investors. And I think that's super exciting. That's obviously why I was investing in private equity funds for 20 years. That's why I jumped ship literally and joined a fintech company, because I thought the way I was doing that without any kind of modern tech tools was very inefficient. And I thought Palico was really adding an innovative way of doing it. But we're one among many companies. I mean, I know, you guys are solving the huge pain point of dealing with the whole subscription document process. There's others that are working on more the diligence question process. So there's a lot of really interesting innovation out there. And I would definitely recommend both, LPs and GPs to continue to have part of your job being really researching what are the new and innovative tools that can help you do your job better.
Thank you. Bjorn, can you sort of do a little bit of a deeper dive? I could literally feel your pain the last time about talking about how to adopt technology inside a fund of funds. And so, yeah, maybe if you could just sort of take the audience into that, and what are some of the pain points that you were feeling in terms of trying to enable yourself with new technology?
Yeah, let me first mention some of the positives as well that COVID has brought about before I step into the pain points, some of which may be more related to European Investment Fund as well, and I'll dig into that in a minute. But the positives are that we fully embraced virtual meetings, digital meetings. People need to understand that as a fund of fund, when we invest in a fund, the only asset that we really can do diligence is a team. So the human component will for us always stay important. We cannot do an analytics on a piece of source code or on a product or on something else. So the human component and the interaction is important. But we've embraced Zoom calls, we've done video calls, video meetings, due diligence meetings. I have to admit it works better when we do re-ups and engage with existing managers. We've also, something that for us was perhaps something quite challenging. We were still doing physical signatures before COVID. We have fully embraced now e-signatures and digital signature processes. So there's also positives in there, but it doesn't stop there. When you talk about fintech to be used in a fund of fund environment, what we're thinking of is now using analytic tools that help us make a better decision-making process. Currently, the market is rather buoyant on venture capital. A lot is going up. So how do you differentiate chaff from the wheat? And if you have good, real analytical tools that the ton of data that we're sitting on can be made available on, so that the analytics can work, big data on our portfolio would definitely bring out interesting patterns. Again, always with the caveat that if the people change, your data may not be as relevant anymore. So, but we're really thinking about putting in processes that help us make better decisions. But problem that we have, one of the pain points that we have is, Claire already mentioned it, we're heavily regulated. On top of it, there's the cybersecurity threat constantly if all of your data becomes in the cloud. So currently, we're hardly in the cloud as the European Investment Bank group, just because there's sovereign issues, there's data security issues, but also as 90% EIF is directly or indirectly owned by the European Union member states. So we're also a public organization, and we need to respect procurement rules. So each time we want to buy a new or insource a new piece of technology, you need to go through a lengthy procurement process. So we're not a little mean speedboat. We're more an oil tanker, and that's a pain point that I hope that technology can solve over time as well, to help these procurement processes get a bit quicker, for instance.
Okay, so we have compliance, we've got security, we've got risk aversion. Alfonso and Ellinor, anything to add to that list of reasons for this gap between corporate behavior and investment theses?
No, not many. I think that all of these are very good points. I only want to emphasize what Bjorn was saying, that at the end of the day, we are in a human resource business, and that human resource business requires whatever the technology you use to facilitate your work, but requires a real human contact. It's feasible to make deals both in, we have, as I said, we have a fund of fund business and we have a direct investment business. It's easier in the fund of fund business to make decisions based just on the digital space, because there are more real objective parameters to base your decision and your due diligence. It's a bit more complicated when you're doing a direct investment approach or investment thesis. But the reality is that at the end, you need a human touch. And it's easier in the case that you are an established fund manager. It's not very easy when you are not an established fund manager to really gain that trust and that human component with your LPs just on the digital space. And obviously, when you are doing direct investment, it's more complicated because the complexity of that team, the complexity of that human component is a bit higher.
Excellent. Ellinor, a question for you. Would love for you to take us back to March of last year. What was it like to be at Verdane? What were some of the immediate gaps when COVID hit? What were some of the immediate gaps that you felt in terms of engaging with some of the external stakeholders?
So I think that's a brilliant question. First of all, I had to mention that when COVID first hit, I was actually an LP with Swedish government and one of the AP funds. But I still think the same answer is here, because at that first time, obviously, no one really understood what was going on, and I think that's when you saw the strength in private equity as a strategy, because it's a long-term in nature, and there's been long-term relationships that have been going on for a very long time, which are very helpful in the initial communication, trying to understand what's going on in the portfolio. And I think that also made it easier to connect LP to GP in various ways, over Zoom, over email, in different ways. And I think also it's interesting to see, if you think about it, how far we come during this last 1.5 years in terms of communication and keeping up the relationships. That when COVID hit, many funds, such as where I was based, we didn't want to do a re-up if we didn't have an on-site. Obviously, we moved away from that, and then we had troubles with the new strategies. Would we need an on-site or not? We moved away from that, and now you can see for Verdane, we have luckily new investors coming into the fund that we haven't even met physically. And I mean, it's easier to just zoom in and out than fly in and out, obviously. However, alluding to what everyone's mentioned already, I think there is a backlog at this point in time where, physical meetings are needed. However, I think we have all done the most of COVID times and brought the best out of it, such as being able to speak to broader team. It's been more inclusive with tech. You can speak to more, in particular, more junior people on teams. You can be more flexible, cost effective, more sustainable with less travel, etc. So obviously there's a lot of upsides, and I hope there'll be a hybrid way going forward. And I think at Verdane, we're looking to be able to communicate with everyone as they wish. Some more in physical meetings, others find the tech available now to be quite sufficient.
Fantastic. Alfonso, I'd love to sort of get an understanding from you. Have you seen any sort of GP or LPs even use technology in a really, really innovative way? I know we've discussed sort of e-sign and Zoom, all that has now become table stakes, but have you seen anyone do anything differently in a very clever way, like using drones for due diligence or GoPros? I don't know, but would love to get some examples.
Not really of the ones that, apart from the ones that are commonly known by everyone, and that actually were used before, because in terms of the due diligence, it's not just making the normal questions, but as well all background checks and all these kind of things that are required in a due diligence process were done before COVID, using technology tools that are normal for compliance and legal departments. I have seen on the last, and not related to COVID, but on the last 3 or 4 years, technology being used by GPs for other things apart from due diligence, like, for example, deal origination. No? And the reality is that you can have, especially on the very early stages of investments, thanks to technology, you can search and identify companies that otherwise would be very difficult to identify. And then you have to get in contact with those companies. But it's a good way. For example, obviously tools like identifying increase of traffic on specific companies on the internet, these kind of things, that they can put you on the path of identifying a specific lead that eventually could be a good investment or not.
Mm-hmm. Does anyone else have an example of technologies being used at any point in the process, either by LPs or the GPs?
Well, I would back up what Alfonso was saying on the GPs really using technology to originate and to really add some intelligence so that they can really find the new big thing before everybody else identifies it. So that is one of the major things I've seen my GPs adopt over the last 4 or 5 years. So nothing to do with COVID though.
Excellent. Bjorn, you'd mentioned earlier that EIF has become increasingly comfortable with remote due diligence. Would love to get an understanding. I understand that you guys work with a lot of emerging fund managers, or did pre-COVID. Would love to get an understanding of how that may have impacted your ability to work with emerging fund managers.
Yeah, there we've really had to stretch it a lot. Normally, we would have said, I think, if you look at the surveys as well, many GPs would virtual due diligence only do it if they have met the people beforehand. So we went as far back as trying to feel comfortable with GPs that we had met at conferences that now want to raise a first-time fund, that we said, okay, at least we've met you, and we go there. It would be difficult for the very few cases that raise a completely new fund where we have never had a contact with those people. There we would try to find, whether COVID permitting, local restrictions permitting, that we can try to find a safe way of meeting the people, albeit on a terrace outside on a restaurant, just to perhaps in a bit of secretive way, so that we're not doing our due diligence on the street, so to speak. But we would like to see them at least, so we would find opportunities, and we've done that over the summer and in between lockdowns. But if in a full lockdown, we were not committing to completely unknown parties. Again, it's the only asset that we have. Typically, we even want to interview analysts in the team because they give great insight on how a partnership works. And if you have someone behind the mic lip syncing what they have to say, it's making our due diligence a bit redundant and shallow. So we try to accommodate as best as possible the restrictions that we have to comply with in terms of trying to meet people, and we try to see where possible whether there's not a clever way, whilst respecting the law and the restrictions, to still meet people. But it's not always obvious, and it's damaging the business a little bit, I have to say, for those emerging managers.
Yeah, go ahead, Ellinor.
No, and can I just jump in there? And I think that's where technology has played such an important part, that you can kind of tailor-made the communication to the counterparty. So LPs and GPs that do have different processes or do different ways how they do things, you can adjust a little bit. And I think that's why some have adopted a lot to tech, and there you can tailor-made the communication, whereas others have more processes and practices in place. So I think here you can leverage the best of tech, but obviously difficult to get around the in-person meetings. But I do think Bjorn is also pointing out an important part, that with tech, you can meet analysts, associates, director, principals, all levels of the organization. You can have more meetings, quick scheduled meetings to be able to reach more people than you could if it would be an on-site due diligence, because typically you don't, as an LP, bring 10 people to that. So pros and cons, but I think tech has enabled it to tailor-made to everyone's needs.
Alfonso and Claire, would you be willing to take the opposite argument, saying that this environment is actually beneficial to the emerging fund manager, or are you aligned with
the ability to use tech is good for emerging managers? I mean, I would say that now is the time that a lot of institutions are starting to look at their stable and roster of managers. And it's tech is just an excuse to connect with the next generation. But no, I mean, I think there's a huge, not cyclical, but secular trend towards supporting newer teams, supporting diverse teams, supporting gender diversity, and all sorts of different ways of thinking of the word emerging. And honestly, technology is just one more tool in the toolbox to do any kind of engagement and evaluation. And I think for a group like emerging managers, where it's a little bit more, I don't want to say needle in the haystack because there's a lot of bad stuff, but needle in the haystack in terms of you matching what you need as an investor to kind of the huge group of options out there. I think it's a really powerful tool. So basically, like, on both sides, the funnel management of going from kind of discovery to that first meeting, whether it's in person or on a video. I think for a field like emerging managers, where there's so many of them and new ones come every day, actually using technology becomes even more increasingly important. I didn't do a good job, Eliot. Wait, I didn't take the right approach.
No, this is great. And can you sort of quickly just sort of tell us, just to go deeper into what Alfonso had said earlier, like, how are GPs and LPs taking advantage of new channels and technology to sort of, one, expand their investment horizon, but also to deepen relationships with one another?
Yeah, and that's why, this is why it's funny, when I introduced myself, I did say, I can't wait till we can all go in person. And we were chatting before this, I said it'd be great to, meet up at a real super return event with everybody, which is kind of ironic because like Palico's whole thing is we're, a digital marketplace. So, really, I think of, whether you're GP or an LP, there's sort of tools in your toolbox to do your job. And they're just a bunch of different channels. And, the analogy that I use is, sometimes we want to email. And back when we only had email, that's all we did. And we flooded each other's inboxes with forward, funny cat video things, right? And we couldn't figure out how to do that. And now we've all evolved, and there's additional tools. There's texting, there's safe chatting, there's video. And so I think right now the opportunity is really, whether you're, whichever side you're on, is thinking of what are all the channels you can use to do your job better. And, I think an example that comes to life nicely is we have actually an early stage tech fund that works with us that's listing their fund on Palico, and they connected with a prospective investor, and it was easy to kind of look at the materials and access the data room and schedule a chat and do all that, which is great, which is cool. But the reality was that investor in real life, like outside of the internet, had actually heard of them before, this firm, but they weren't aware that they were fundraising, and they didn't kind of really, they weren't really able to hear their story, right? And so that's what I recommend is, whether it's Palico or other channels, is just think about, like, how do you help yourself stand out a little bit using different channels, podcasts, webinars, tech platforms. All these things are really good tools to help you kind of stand out and tell your story. And I guess the second piece of that is on the storytelling. This is where, there's data room and there's databases and everything, but then it's like, how can we use technology to actually get beyond the PPM, get beyond the PowerPoint, to have like more depth of a story. And so that's why, and do it, by the way, in a compliant, safe way. And I think the joke I said the other day is, like, sometimes you listen to these drug commercials on TV and you literally have no idea what disease they're curing because you're not allowed to talk about it, right? And so we face those kind of similar regulatory challenges of communicating and telling our story in a compelling way, but doing it in a safe way. And sort of being able to do it on a platform that is regulated allows you to post video and do audio and podcasts and really be able to tell your story, because that you're only going to be connecting with approved, pre-vetted prospective investors. So I would say, keep doing the meetings and the emails and everything, and just think of tech as one more tool that can hopefully help you.
Fantastic. Just wanted to pause briefly and announce the polling results. 71% have said that in-person meetings will return to the deal cycle. 14% said no, and another 14% said not sure. We're 1% shy. They're not sure how that works. But Ellinor, would love your take. You talked earlier about having some type of hybrid model post-COVID. Can you elaborate on this a little bit more? What stays, what goes? Where's more friction needed, and where might more technology stay and come?
Unmute. So now that I'm muted, so I think, it's impressive how far everyone has come, regardless of their organization, in terms of using tech and bringing the whole firm up to speed on tech. So that is a super positive thing that I think we should embrace and keep. And it's also, as I mentioned earlier, becoming more inclusive, I believe, because more people can access. It doesn't really matter how far away you are. You can work on different time zones, etc., much easier than if you travel. So I think if you look into the future, at Verdane, but at many other places also, I think there'll be a hybrid model. It is more inclusive. Tech is continuously developing. And as I said, you can meet everyone's need in a more tailor-made way. It's time effective, it's cost effective. And I think if you look at private equity as an asset class, with the long-term nature of it, you obviously need the meetings, but maybe you need the meetings when you travel anyway. You might not travel just for an AGM. You might travel and do a round of meetings and interact and have those personal conversations. And you might not be triggered by your AGM schedule like it used to be, but rather want to have that dialogue. So bringing the best, I hope, for both in terms of using tech and connecting in person. And I think we should go out of COVID with positive of what we learned, and then maybe skip some of it, and maybe not too much Zooms, but a hybrid.
Alfonso, I'd love your perspective there, and would perhaps even love to know if there's sort of any residual pain points left in the deal cycle where additional invest tech can help?
Well, I think that all that you can invest in tech for making efficient the management of the data of the portfolio, following up the execution of the portfolio, the legal and the compliance staff, the origination processes of the deal, that's really welcome for us, no? Because we don't want really brain power to be invested in I don't know, following up a company to basically procure us the audited accounts, no? Or to compile all that information in order to create a proper Q report for the LPs, no? If tech can enable us to dedicate 100% of our time to relationships with the companies in where we are investing, or the LPs in where we are investing when we are investing to the fund of fund, this is really welcome. But there is a part that an important part of our job that cannot be, in my opinion, my humble opinion, cannot be fully digitalized, no? Which is at the end of the day gaining trust, gaining the relationship with the company you are investing in, or especially if you are making direct investment, because it's less important in the fund of fund business, no? Where you are a passive investor in reality, and yes, you need to be aware of what's going on with the GP that you have invested, but in reality, you are not later on making any kind of management or decision on that portfolio, no? But when you are investing into a company, this is like a marriage, and you get married, and then it's when the work starts, no? And you need to work every day with your wife or with your husband, no? On that relationship. So it's exactly the same, in my opinion, for when you are investing into a company, no? And you cannot fully digitalize that thing, because if not, most probably will not work, and definitely you will not be able to create that level of trust.
Great. Bjorn, you spoke earlier about separating the wheat from the chaff, I think, when talking about evaluating different fund managers. Obviously, valuations are buoyant. Some might say frothy, but would love your input on how do you evaluate different fund managers? Who's for real and truly performing, and who's just riding the valuation wave, as it were?
Well, we try to look for a recipe of success somewhere in what they're doing. Have people really found, and there can be more ways to roam than just one. Huh? So we have more than 10 successful fund managers that we really say they stick out, and they all have different DNA. So there's no one mold that would fit all of them. But you need to look at the data. There's people that need to have a diversified portfolio, and then they need to have a bunch of winners. There's others that rely on the one unicorn dragon each time in the portfolio. You need to know what is driving them. If you have a first-time team that has made one single investment out of a bunch of investment, but the single investment was the successful one, what's the likelihood that with the second fund they will have that one single investment again? Then you need to find out whether there's something they have learned, is it their model or not. So it's really about finding out what their strategy for success is. There's people that say, I would never spray and pray. There's people that continue to invest and invest big money in companies where we already know from other fund managers that we're in that they're actually not the winners in their portfolio. So why would you start continuing putting more money in there when actually you should be pulling the plug perhaps? So it's really understanding psychology and what's the element that drives the return factor. Now with a first time team, you need to look into the individual track records of the people, and is it something that they can then bring to this new group as a success factor? And then additional element there is, can these people, whether it's a team of 3 or 4 new people, can they live together for the next 10 years or not? So that's where psychology comes in again. So because of the various elements that can make or break a good fund manager, you need to see what are the various options that exist, and you can never eliminate, according to me, the human factor, as Alfonso already said as well. But I would never say that technology is currently hampering anything. If anything, even for emerging managers, technology is helping. Because there may be fund managers that without technology they would never have an opportunity to raise a fund. Not all of the LPs might invest without a physical meeting, but some of them might.
Excellent. We are up against time. We've got 2 questions from the audience. The first one is related seems to be around industry resilience. What technological and non-technological investments still need to be made to further build up resilience in the GP-LP relationship so that it can weather future shocks? So I think we're talking about some outstanding pain points, but does anyone sort of, any foundational investments that still need to be made here so that we can weather, hopefully not COVID, but whatever shock comes down the line? Yes, Claire.
I would offer a better tool for engaging the secondary market. And it's something that we do here at Palico, but we're just at the beginnings of it. I mean, we're a marketplace, but you can't, transfer cash from one party to the other. I'd love to see a future where, hey, let's have all of the fund documents, the LPA and the subscript docs on a blockchain, and I can just zoom you over the LP thing from me to you. That I think would be a huge pain point for both GPs and LPs, and frankly, IR teams who have to handle all this and manage all the people who want to get in and all the people who want to get out. It's now like $100 billion annual industry, but if you look at private markets, it's like anywhere between 10 trillion or whatever. So it's just a tiny piece, and I think that's going to be a future place where there's going to be a ton of innovation.
Bjorn, Alfonso, Ellinor. Yeah, Bjorn.
From where we sit, I think another pain point that probably we feel, but probably because of who we are, also the GPs, then is anything that has to do with reporting, but not just the quarterly report, but just making certain that information on the portfolio. Probably have, I don't know whether Ellinor can testify that or not, but if you have 10 LPs, they all have different formats that they want to see the reporting in, or they all have side letters. So any technology that can help to make that available in a fluent way, both for GPs and LPs, that would be, according for me, the holy grail. I know technology exists, but it's how do you manage the variety in terms of requirements. So we're very specific about geographical requirements. Others may be about sector requirements, but just that you can give whatever you can share with your LPs, but in a structured and full-fledged way, so that's immediately shared with your whole LP base, and not needing to tailor make it for every single one LP that you have on board.
Great. We've got 2 minutes left. For our last 2 minutes, we'd love to sort of put on our predictive caps. And I think it would be great if each of us could briefly make one prediction, either for your European technology or investment tech for the next 10 years. So Claire, do you want to kick us off?
Sure. All right. I think COVID is the dress rehearsal for the big problem, which is climate change. And I think that all the tools we've discovered will hopefully put us in a good position to tackle these problems. And I believe in the power of innovation. And so my prediction is that tech will finally be the center of investment behavior in private markets. That's music to my ears. Ellinor.
I'm on a similar topic. I think tech is going to be the accelerator of us moving towards a more sustainable world. And I think tech is able to scale sustainability in such a nice way. So I think that's going to be a focus for the 10 years ahead.
Alfonso?
I will say that if you want to be on the future, invest today in tech. No? Because the reality is that to me, we're saying more and more that tech is more a defensive industry rather than a growth industry. So if you want to be in a defensive position, rather be investing in the future rather than investing in the past. Excellent.
Bjorn, no pressure. Do you want to close us out with your final prediction?
So I think as well, tech, and I would combine tech with Europe. Okay, I might be biased as a European investment fund. I'm not going to repeat the climate because I think we all know that this is an opportunity not to be missed. But in terms of tech in Europe, it's happening, people, and it's generating fantastic returns. So if you're not in Europe in tech, you might be leaving money on the table.
Fantastic.
I agree.
Yeah. Well, thank you very much, everyone. Panelists, thank you so much for a lovely discussion on European technology and invest tech. We're handing it back over. Abby, all over to you.